Robinhood is up over 300% in the last year, and we need to figure out what is going on because that is a question that many of y'all asked on a video that I did the other day. So I am answering that question here. So let's go ahead and break it down. Now, many of you guys know Robinhood, the popular investing app, but they have been switching things up, and this is the reason why they have done quite well. But let's take the clock back just a bit because it is important for you to understand exactly what they do and how they do it to determine whether or not it is a good stock for you. Now, we know, most of us, know that Robinhood did, whether you like them or not, did absolutely change the game. They were founded again in 2013. And the reason why they're most known for changing the game is because, and this makes me feel old, it might make some of y'all feel old too, before Robinhood, you had to pay money to buy and sell a stock. Whether you were doing it, and really there weren't too many apps before Robinhood, but you would have to go online or go into a physical branch, a physical place, and say, hey, I want to buy a share of Apple, buy a share of Microsoft, and then pay $5, $10, $15, even $20 to buy a share, just one share, and then pay again to sell a share. That is how Charles Schwab and all these other companies made money. Yeah, there were fees for that. And then you couldn't even buy fractional shares back then either. Robinhood made both of those things way more popular. And because they got so popular, that became the standard because of Robinhood. So that was back in 2013. Then they went public. They had what is called an IPO where we could buy stock in Robinhood in 2021. That brings us to today where the stock in the last 6 months is up 118% and up about 300. That is right, 317% in the last year. Now today, the time I'm recording this, it's down roughly 7%. I think they're announcing earnings right around the time that you may be watching this video. But I'm not too worried about that when the stock is still up over 100%. So, what is going on here? There are two things that you want to pay attention to. Obviously, they are in the business, they are a brokerage. They're in the business of buying and selling stocks and margin and all that type of stuff. However, the big game changer here is event contracts. That is the biggest change. For example, they made $2.3 billion in Q3 from event contracts in and of itself. It is one of their fastest growing businesses. And they made $2.5 billion in October by itself. Event contracts, I kind of lean on the side of gambling, and there are some court cases, I believe, that are kind of trying to figure out what the differences are. But for example, it's a contract saying, hey, who do you think is going to win the presidency? You buy a contract based on that. We're not talking about options. We're not talking about a true investment where you're buying a share in a company. An event. On the event itself, do you think X is going to happen or Y is going to happen? That is what people are buying in mass on Robinhood. Now, I do think that there is an interesting correlation between that and the rise of DraftKings and all these other sports books. I'm not going to get too deep into that because a lot more research I need to do into the event contract space in comparison to those. But it is growing a lot and is doing numbers there at Robinhood right now. So that is one part of their business that has grown dramatically. The second part, when I think this one is a little understated, is the fact that it was also added to the S&P 500 back in September of this year, September 22nd to be specific. It replaced Caesars Entertainment, which ironically enough, I was talking about sportsbooks earlier, and I didn't actually try and make that connection. But interesting that if they are in the same or somewhat related, that connection is there. So it did take out Caesars, and that is another big connection. Now, the reason why that is important for those that may not know is we know the S&P 500 is the top 500, largest 500 companies, roughly. Largest 500 companies in the U.S., and people buy index funds. A lot of us buy index funds, and I usually recommend index funds. Well, because index funds are so large, when companies are inserted into the index or inserted into the S&P 500, Vanguard, Fidelity, and all these massive funds have to then buy shares of Robinhood. This also happened to Tesla, I think back in 2021 as well, 2020 or 2021, I believe. And those shares also went up too. So this has been a massive boon for the company as well. So those two things are why Robinhood has gone up. Now, with those two things in mind, should you go out and buy Robinhood or consider buying Robinhood? Look, it is high on my list. I would say it's got to be top two. It's got to be top two of adding to my portfolio. As most of you guys know, I like to make changes to my portfolio at the end of December and in June, and it is real close to December time for your boy. And I can't find too many stocks that are not already in the AI space that are doing this well, and I don't foresee, and that's not to say that this stock is perfect or bulletproof or anything like that, but I don't see anything that I can imagine that would truly throw this off, because I always like to invert things. What is the worst case scenario that would throw this off or blow things up? Now, crypto could fall apart. You know, and Robinhood is down right now, and crypto was shaky for a bit. Now, that is something that you would have to be concerned about. If the economy was to take some sort of downturn, are people going to turn to Robinhood and try to get themselves out of it? And I don't like that concept. Let me just invest my way out of it and try and just, hit a lick. I don't like that. I don't think that's the best way to try and replace your income. But I'm not sure if that is what would happen, right? We saw what people did. We saw what people are doing now, right? And times are relatively hard, and we saw what people did in 2020. So I'm not sure if that is going to be, a down thing for this particular company. It is tariff resistant. You don't really tariff things like Robinhood, and I don't think there are going to be any new regulations that would harm Robinhood in this space. So I'm kind of bullish. I'm actually very bullish on this company. There are a few more things that I need to read and figure up on or follow up on just to double check that thesis. But again, it is top two for me. The only reason I'm saying top two and not one is I just need to go back and just rework my list and double check everything, because stocks that I liked maybe 1 or 2 months ago, you go back and see, are they still as good as what they were at that point in time? Netflix, for example, just did a stock split. Stock we've been talking about for a calendar year now that has done well. Is it still good? And then will it still be good moving forward? Things like that. I need to go back and reevaluate those and see, is that number one or is that slid to number two, making Robinhood number one? Some of those defensive stocks that we had talked about last year, are those still good, right? These are the things that I need to evaluate. But Robinhood, it is near the very top for me. But where is it for you? Are these two reasons sufficient? Obviously, they have the revenue numbers, the users, and things like that. Let me know in the comments below. If you want to know other stocks that might be good for your watch list right now, check out these videos right here.